Ooh, man. Time to get ready for this morning show. That's some good stuff. That's some good stuff. All right, let's see. I got my toilet paper there. Cool. Did not bring that myself. I got my toothbrush, toothpaste, deodorant, hair gel, Q-tips. Okay. I'm not seeing my shampoo though. Where did I bring my shampoo? Dang. Should I even have to think about bringing shampoo when I go to a vacation rental? Do I even need to bring conditioner, soaps? Are these things that people actually bring to their vacation rentals? Oh, the answer is no? Why? Oh, that's why. Because Sojo. Sojo is your dynamic, automatic amenity delivery company that partners with vacation rentals to make sure that I don't have to bring my body wash and my conditioner all at once. Who would have thunk? Not me. Definitely wasn't me.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Man, good morning, guys.
Good morning. I'm glad you found all your toiletries well.
It was a struggle. I was staying at this crazy property and just ended up forgetting some stuff, you know?
Feeling fresh
Well,
this morning.
Thank God for Sojo.
Yeah, thank God for Sojo. Yeah, as anyone could tell on the live stream and on the audio, we're welcoming a new sponsor to the show. Very excited to bring in Sojo for an extensive GMH partnership. So you'll hear a lot more about them throughout the coming months. But man, how are you guys doing? Are you feeling as fresh as I am today? Or is it just me? Is it just me today?
Well, you have a pretty an elevated level of energy, but I'm feeling good. I had a nice low key weekend, but not quite where
Low-key
you are.
weekend.
I need some more coffee.
It's definitely the coffee.
Yeah, I'm a bit jet lagged still. And then yesterday went to the IndyCar race in Birmingham, which I'd never been to a motorsports thing before, but it was pretty cool. I'm not gonna lie. I didn't have terribly high expectations, but yeah, it was very tiring, but super, super cool to see.
Yeah, it
Well, we
looked cool.
missed
I was
you.
like, oh my God, are you at F1? And then I realized that was not
Close,
possible.
close enough.
Close. It's, racing cars, all the fun stuff.
It looks the same.
We definitely missed you, Michael. How was
did.
Scotland? Give us some details.
It was incredible. I think, of course, it was held at a storied collection property, but we brought in some of the
Of course.
top leaders of the hospitality space globally to Gilmerton House in Scotland, and we did all the stereotypical stuff. There was golf, there was whiskey, there was falconry, there were flaming arrows being shot on the front lawn late at night. But all in all, great people, great place, plenty of space to kind of break out and get your work done if you need to, but also perfect spot to bring people together. So 10 out of 10, not going to lie.
10
That's
out of 10.
awesome.
Bringing people together, one castle at a time.
That's
Storied.
right.
Yeah, I'm still lobbying for the GMH, I don't know, episodes from Scotland.
Will,
Any
let's do it.
castle will do.
Hey, I'm waiting for you. I need you to give me the stamp of approval for a castle.
These properties haven't gone anywhere for hundreds of years. So whenever you're ready.
It's a great point. Great point. Well, for all the, again, listeners and viewers, we actually have an exciting show for you. We have a detailed outline. And as Brandy said in our group chat before, even going live today, I think this is the most organized we've been in a very long time. So we're very excited for the lineup ahead. Now that Michael's back, and last week we covered some stuff with Jamie Lane, our other co-host of the show, who gets to join us about once a month, which, again, shout out to him for winning a Shorties Award last week, and a bunch of our other past guests and other just people in the industry that we all know and love. So congrats to everybody who won an award. You know, it was great to see. But we are excited. So in honor of also Sojo being our newest brand and sponsor of the show, we're also really excited to say that they also partner and integrate with TravelNet. So if you use Track, then you can plug in Sojo and get them to deliver these bathroom, kitchen, and other types of amenities directly to your property based off of your calendar for turnover. So you don't have to worry about keeping things in a warehouse for inventory and have all this kind of chaotic mess go behind the scenes with operation. Sojo and TravelNet are a great operation and tech platform for you to partner up with and get. So make sure that you grab our link in the show notes or just check them out, reach out, and let them know that you heard about them from Good Morning Hospitality. Now, to cover the news, Michael, I would love to kind of actually start with you and kind of hear your thoughts on some of this stuff with Hyatt. We saw that Hyatt acquired Mr. and Mrs. Smith. I would love to kind of have you take the lead on this part.
Yeah, so it's about a $66 million acquisition. Mr. and Mrs. Smith is not a brand. They do not own any assets. It is completely asset light. But they have a great footprint in Europe, and Hyatt is eager to expand that footprint. So essentially, they're able to acquire all of the customer lists and the customers of Mr. and Mrs. Smith, as well as have access to a lot of the boutique properties that Mr. and Mrs. Smith works with. So I really, really like this acquisition by Hyatt. It's also a great thing to see acquisitions happening that aren't fire sales. This doesn't scream fire sale to me. So congrats to the team at Mr. and Mrs. Smith for building a great product through the years. It is a good sign for all of us that some of the big flags are still buying companies, selfishly as well, but for the industry as a whole.
Can I ask you guys, did you guys know what Mr. and Mrs. Smith was before?
No, I was just about to say that before this episode, I was doing some research and I was like, I want to stay at all of these places. I was like, I want to stay here and at my next ski trip. And it made a lot of sense to me after I went down the rabbit hole into all of their offerings. And I was like, it makes sense because it would take Hyatt a long time and it wouldn't make a lot of sense to go through and kind of acquire or build this themselves. And so this feels very natural. It makes a lot of sense.
Yep.
Totally agree.
Yeah, I had heard of it before, but it's definitely a more well-known brand in Europe than it is in the US. There's not a big American footprint.
Yeah, that's what I kind of figured, because especially with the article and the news story being the price of acquisition in pounds versus US dollars, figured, okay, probably makes a little bit more sense there. But I'm also in the sense, yeah, it looks great. And I think, being asset light, like you said, Michael, was super smart on the whole side of Hyatt. So very good for them. And now for a couple other fun news pieces that we've mentioned before in the past. It's not like this is, something we didn't expect as a show.
Maybe not so fun. Yeah.
Not so fun. Yeah. Sorry. Fun's a bad word. I need to watch how I use these little words. But we saw last week, I think, Wednesday, Thursday, one of those days, Sonder got notice of potentially being delisted. And then last night, like yesterday, we saw the same thing with Vacasa. Their stock price was under $1 for over 30 consecutive days, and hence of potentially being removed from the platform. So, or not the platform, from being a publicly traded company. So this is new for me. I'm never been like a kind of like a publicly traded company guy, like where I know all the stuff that goes on behind the scenes. So love to get your guys' thoughts. One, we saw it kind of coming, but two, more of like, what do you think is next? What do you think what are your thoughts in general? And we have a thought from a listener, but we'll share that in a second.
Yeah, I think they both went public for similar reasons at a similar time, where vacation rentals were peak interest and front and center. But they both went public via SPAC and had never been profitable before. It's okay to go public and having never been profitable. Just take a look at Airbnb. They didn't turn a profit until I think their second quarter of being publicly listed. So that's not really the biggest issue here. The biggest issue is there is no line of sight for profitability. There is no guidance for profitability. And the clock has started. They have 180 days now before they get yanked off the NASDAQ, or I think it's NASDAQ for both of them.
Yeah.
So they have to get above $1 for 10 consecutive days during that 180-day period to not be removed. And that's going to be a challenge because none of them they're not kind of tinkering around the 90-cent share mark. And again,
they're not even close.
There's not really major tailwinds to kind of send them above that. So they're going to have to make some pretty significant organizational changes pretty quickly. I don't know stats of companies that get this notice and actually stay listed, but my guess is it's not terribly high. So if anyone knows, please let us know. But gut says it's not something you can come back from very easily.
No, and I also think like the changes that they need to make, let's say today they had major cost reorganizations, dumped, cost centers, like as for Sonder's case, like buildings that aren't even close to being profitable. All of that is going to take time for them to see the benefits or the effects of those changes. And I don't think that will be in time for, 6 months is not a long period of time. So yeah, we talk about it a lot, and usually with a little bit of maybe a little bit of a smirk or like a little bit of cheekiness, but this is not great for our industry at all to have the urban and sort of traditional VR kind of quote leaders in our space go public and then like really, really struggle. For other operators that were potentially eyeing a similar path, it makes it very difficult to say like, okay, that's our exact business model, but we're different because, it just makes it difficult for the rest of us. And you should want people in our industry to succeed. So, I mean, I think we all saw it coming, which is why it was a little bit, not a surprise, but it's not great to see.
Yeah.
Yeah. I think the Sonder one for me was more obvious than the Vacasa one. Vacasa seemed like they had the ability to turn it around and become profitable, but they have yet to do so. And at this point, it doesn't look like there is that path. Fingers crossed, like Brandon said, it's not good for anybody in the industry for these two to go down, except as to serve for a warning of how to make sure you're running a profitable business.
Yes.
And, it's a bit sad to see. We've all probably had friends that worked at Sonder or worked at Vacasa, and you got to be very proud of the things you've done in your career. So I hope they can pull it out, but let's see what happens.
Yeah, and I'm kind of curious too, because this again is new for me, but to hear that they have to get it above $1 for 10 consecutive days within that 180-day window, what happens if it falls under again, like the 11th day, it goes back down? So like, I don't know. That's fine for, okay.
Yeah.
Well, to me, it doesn't prove anything. It's like, all right, 10 days. That's all we got. So it's like, I think, to me, like Brandy said, this is a serious thing for our industry, for any operator, whether it's urban or destination focused. And so I think, is 10 days enough to prove that, like, okay, like you got the delisting removed, but you're still not profitable and you're still not, like, I don't know. It just is a very interesting rule.
They're both going to have to turn a profit in the next 6 months, I think, for there to be.
I just don't even see that as a remote possibility. And that's, I mean, to your point, we were saying how Sonder seemed like a little bit more obvious. That was when you looked at what Vacasa's earnings or growth projections were for the following years. It was something outrageous, like 10,000 or 20,000 units added. And so first, that seems crazy. And then also they've been hemorrhaging owners, so they have even more ground to make up. So I think that, I mean, if profitability is the goal, that's even further out of reach than staying listed. But
Yeah.
I think Sonder Q4 alone notched a $54.8 million loss in Q4.
And that is a huge hole to come out of.
That's
you
massive.
know,
That's not something you can turn around quickly. And if that person can turn it around, then they're going to be famous and get picked up by a lot of big companies.
Yeah. They're about to be really, really well off. Go ahead, Brandy.
Oh, I was just going to say, if I was at Sonder, I would be looking at just trying to go in and cut it, like looking at the bottom half of your least profitable properties and just doing whatever you need to do to get out of them. And, there's definitely, the unfortunate thing is, by getting out of those leases, you'll also trigger probably a bunch of lawsuits. But they have their properties they have no cash contribution margin. So it's like, you just have to, with those on your, like in your portfolio, they're not going to have a path forward. So I feel bad for the real estate team who initially is going out there being like, yeah, whatever you want. And now they have to go and kind of like claw some of those back.
Yeah. Well, we do have friends that work at both of these companies, and so hopefully, for the best, they figure it out. Hopefully a miracle happens within the next 6 months. And for all the viewers right now and listeners, you don't have to just take it from us. We actually reached out to a couple people last night once we got the notice of Vacasa, and we do have a comment from one of our listeners and a very well-known industry name, Steve Milo. So we're going to play a little clip from him, and then for also giving kind of a cue up for a new segment of the show that we're really excited about, and apparently you guys are too, because we've gotten a couple voice messages from our hospitality hotline, which is a dedicated hotline just for our listeners and viewers that watch the lives or that also listen. And you can call into the show. You can leave a message up to 90 seconds for our voicemail team to basically analyze and go through and select for episodes. And what you can do is you can leave thoughts, comments, questions, all the above, and we'll answer them live on air, which is going to be very exciting for us again. And so here's a quick comment from Steve Milo, who is the CEO and founder of V-Trips.
Hey, good morning, Will. This is Steve Milo, CEO of V-Trips. Appreciate you having me on the air for a few minutes to talk about Vacasa, who at this point is an example of what not to do for our vacation rental industry and how not to run a company. The issue with Vacasa starts at the very beginning of Vacasa claiming they could run a business that was unprofitable and raise money. And they were rewarded by raising money and being unprofitable. And they kept getting rewarded, and they even were able to go public being unprofitable at a very large amount of unprofitability. They lost $332 million in 2022. The reason why the stock has traded under $1 for the past 30 plus days is because investors believe Vacasa will run out of cash. And why do they think they will run out of cash? They will run out of cash because they have far more current liabilities than current assets per their balance sheet that they just released a month ago in their March earning call.
I agree with Steve partially there. VCs rarely invest in profitable companies. That mindset has shifted over the past 6 months or so. But when Sonder and Vacasa were raising money, basically any company getting venture money was not profitable, period. That's just not how venture invests. Venture invests in high growth, rapidly scaling companies, and with the kind of idea that they will be profitable in the future. Now, where Steve's right is the amount of net loss that they were incurring. And, at some point you have to dig yourself out of a hole. So thanks, Steve, for calling in and weighing in on your thoughts. And yeah, we're really excited about this new segment we'll be doing each week. If you have any thoughts, the link, the phone number is going to be in the show notes. Call in. We'll have some commentary on the back of it.
Oh yeah, Brandy. Any comments for that? Just that piece.
Well,
In
just kind
itself?
of going off of Michael's comment, the high growth component, that's where the kind of the mismatch is that our industry is not high growth in the sense of, or, in the sense of what VCs are looking for. This isn't a tech company where once you reach a certain point, you're going to have this exponential growth and your costs stay the same. This is very linear. As you grow, your costs also grow in line with that growth. So, thank you, Steve, for calling in. I'm really excited for this segment. I think it's going to be great to hear, what our viewers think and kind of things that are on their mind.
Yeah, and one more comment on that. Both Sonder and Vacasa tried to pitch themselves as tech companies.
Yep.
And that's where the big mismatch is from the public versus the public markets versus how it's trading. And it's great for raising money. It's great for, getting to IPO, I guess. But at some point, the hens are going to roost. There's some saying like that.
The hens come home to roost, I think.
Yeah,
Is
there
that?
you go. The
Yeah.
hens come home to roost. And the true colors will shine through, right? You're not a tech company. You're a property management company. Period.
I know. Like at some point, someone's going to find out.
Yeah. Joke's on nobody. It's on
Yeah.
anyone holding the stock, right?
Yeah.
So please, if you're out raising money, don't do it under a guise or a veil. Be transparent. It's only going to be beneficial to everybody involved.
100%. Well, to move on to the next and last hospitality hotline caller for today, we have more, but we're kind of queuing him up for future episodes on different topics. This just seemed to line up pretty good. So this one is from Andrew McConnell, which is part of TravelNet Solutions, which is again one of our amazing sponsors. So gonna give him a quick dial right now.
Hello, this is Andrew McConnell, the founder of Rented.com, a TravelNet solution. I wanted to check in how people in this hospitality space are thinking about technology these days. I remember going to an industry conference, maybe almost 10 years ago, when people were lamenting how many different software providers they were having to rely on and saying, hey, I just want one thing that can kind of make it all work. And then right before COVID hit, I remember Sarah Bradford being on stage at a VRMA conference saying, I got into this business to be a hospitality manager, but I spent all of my time as a technology manager. And it's this double-edged sword of if you're not using technology, you're kind of slipping behind because there's so many different ways to automate stuff, makes things more efficient, but it can become overwhelming. And so I'd love to hear from y'all and what you're seeing from your listeners and others, how people are able to manage across that, what success looks like and what some of the less successful implementations and things look like. Obviously, as a technology provider myself, I have a vested interest in this. So just curious how people are thinking about it. Thank you for all y'all do. Bye.
Yeah. Brandy, I was immediately, yeah. Oh.
So I definitely understand where there's the sentiment where, I got into this because I love hospitality and creating a great guest experience. And now I'm trying to figure out how to build a technology ecosystem. And I think that the right way to view this is that this is just how it is. You can't technology and all these different softwares or different needs, at least like a core few of them are essential if you want your business to be competitive. And so if you've been in the industry for a long time and the thought of creating this ecosystem is daunting or it's not where your skill set is, I think you should hire for that. Hire like a systems manager, someone who comes in and they're responsible for making sure that all of your technology pieces come together because wishing that it could just be all about hospitality right now or again is just not going to happen. You need this technology, at least like I said, a core few products to make your business viable, competitive, even better for you in the long run. And so I would say like even so not 10 years ago, but 7 years ago when I started in the industry, there was still a lot of that kind of attitude. And I would say that that has dissipated to a lot, like in a large extent, like especially in the last couple of years. I think that some people are like, okay, now there's like so many different options for all these little niche things. So like I said, there's probably a core couple programs that you need, like your PMS, dynamic pricing, maybe an ops management tool, something like that, like some core products that you need to run your business, and at least have those. And then when you get comfortable with those, add in things that you think you need. But I think that resisting it is futile and it just is putting you and your company at a disadvantage. And also, it's not as scary anymore. Like anything, the more you use it and the more comfortable you get with it, the easier it is. But I know certainly as we've grown, like the technology ecosystem that we have in our company is overwhelming at times, because it's not just vacation rental STR tech that we have anymore. It's really gone beyond that. So that's my suggestion. If you can hire for it, that's something that you're able to do, I would absolutely look into that, because speaking as the person that was responsible for managing a lot of these systems, it does get overwhelming. It does become the majority of your job, and that's not the highest and best use of your time. But I think, to give Andrew an answer, I think that people have embraced the fact that they need the technology and are trying to figure out their best way of like handling that ecosystem.
Mm-hmm.
Yeah, I agree with both of you. I think Andrew's spot on. To me, a lot of people in short-term rentals have gotten away from the fact that it is still hospitality. And you go to a hotel, half the hotel leadership went to hospitality school. They have formal training. They understand this, that, and the other. In vacation rentals, the best providers, the most profitable ones, are the ones that have embraced technology and automate as much as they can, which removes a lot of hospitality touch points, which is part of the shortcomings. I certainly feel the pain of 10 different logins for 10 different systems. I think there's middleware coming that'll kind of help piece it all together. But that's also what I love about what Track's doing, which is taking best-in-class softwares, bringing them in-house, so it's all under one roof. So love that approach that Track's taking, and hope it continues, and there's more pieces zippered in seamlessly. I don't think we're ever going to get to just a single login, and that's okay.
Nope.
But if you can go from 10 to 5, that's a big win. But it's all departmental as well, right? Your housekeeping team's not logging into revenue management, and vice versa. So as a company, you might have 10 different logins, but each employee, unless you're the founder, probably only has 2 or 3.
Yeah. My thought is a lot of, and I agree with both of you. I think my issue is the tech companies that position themselves as offering hospitality, where in reality they're offering a means to offer hospitality. So I see like some tech companies talking about this and that, and this new feature that's going to make them the most hospitable tech platform, blah blah blah. And it's like, at the end of the day, I'm sorry, you are the means of me as the operator, or Brandy as the operator, or Michael as the operator to deliver hospitality, and take stuff off our plate that we shouldn't really have to be doing in order to be more aware and like kind of picking up cue moments, as Michael said, or touch points for delivering hospitality. So I think tech providers kind of get too caught up in that side of like, we are hospitality, and it's like, no, sorry, like I can do this. Actually, like I know a lot of operators that are very not maybe anti-tech, but lack of tech, and very just focused on, like, they're small, they're obviously not the big players, but they're very like, I have my property management software, my dynamic pricing, and that's basically all I need, my smart access code and whatever. But to the other side of, Robin Cragen from Moving Mountains always says this, on the sense of like death by subscription. You're going to $20 yourself to get to death. And there's so many niche products out there that, it real, like, do you need to overdo it? No, I think so. this is a message I've been very passionate about in the past, is, optimize your technology to its fullest potential before you even think about adding another piece. If you have Breezeway and Track and Sojo and, Rented, use them to their fullest capability before you even think about, getting a digital guidebook and this and that, like all these pieces, because, you haven't even fully maximized what you already pay for. So that's always another thing too, is like, look at what you're paying for, make sure you're not 20 bucking yourself to death, and then move on to the next piece if you really need to. That's my
Yeah,
thought.
I was talking to someone at Verma who is like thinking they wouldn't tell me what the software was or what the product was, but getting into like providing another vendor for the space. And so my advice to him, I was like, you need to think about, if we have some more difficult economic times coming, like, is your product going to be the one that gets kept or the one that gets cut? And I was like, I will take you through, if I was looking at my tech stack only in terms of cost, like the things that I would eliminate before, like, down to bare bones. I was like, so are you in the bare bones? Because if you're not, I don't really know if it makes sense to right now go and start, like, you don't even have the product yet. You want to start that process? That seems crazy to me. So we'll see.
Yeah. It's a good point. And we do see a couple comments coming in live. Caleb Hannon, Brent Lee Boswell, we see you guys. We are running out of time, and these comments are a little bit more extensive than we have the minutes for right now. But I think we would love to answer these on a hospitality hotline, maybe. Shameless plug this in.
Call it in.
Call it in. That's our best advice. We try to keep the show to 30 minutes for our listeners who are very used to every Monday and Tuesday listening to the show for a 30-minute commute or whatever it might be. So yeah, great opportunity for a hospitality hotline moment. And we'll also reply via comment back on LinkedIn, it looks like. So thank you guys. And any closing thoughts for you two before we wrap this bad boy up?
No, I'm just excited about our most organized show ever.
Yeah, this new segment's gonna be a lot of fun, and we'll be talking about what is relevant and front of mind for any of our listeners. So that's what's most exciting.
Exactly. And one big shout out before, again, we wrap up. Scale Rentals. We will be in Barcelona this coming May. I think Michael and I are leaving like May 15th. Brandy's there like a day before us. We're all getting ready for this awesome conference. Shout out to Damian Sheridan and the team putting it on, and for, of course, our sponsors bringing us out there. We're excited, and yeah, it's a great episode. Love doing my Mondays with you guys. And for everyone who's tuning in live, make sure you like and subscribe. Call on that hotline. Make sure you leave us a nice voice message, and we'll get right to it for next week's episode. So thanks again, and we'll see you guys next week.